Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show today, with inflation back to target, how low can rates go? And there are some mixed signals on the economy, but everyone agrees it doesn't feel good. Plus, a new law is finding forced labor in supply chain and catching some companies off guard. That's all ahead. But first, for the week that was in business, time for the briefs. Inflation in Canada has officially hit the Bank of Canada target at 2% in August. It's now in a range that will allow for more generous rate cuts ahead. Gasoline, clothing, and footwear prices all declined. And while food prices were up 2.4% in the month, a separate report from Eckler suggests wage increases have also topped out in Canada. Firms surveyed said wages would rise 3.6% next year, down from 3.8% this year. Interest rates in the U.S. came down this week for the first time since inflation took hold in 2021. The U.S. Federal Reserve cut rates 0.5 percentage point and left the door open for further cuts. Separately this week, stronger than expected retail sales in August points to a robust U.S. economy. The federal government will allow longer duration, 30-year mortgages, and also increase the threshold for home prices requiring a 20% down payment to $1.5 million from $1 million. The moves are aimed at first-time buyers and newly built homes, but could drive prices higher by increasing the pool of buyers. Separately, housing starts in August declined from July as tight supply continues to keep prices high. Air Canada averted a potentially costly strike with its pilots with a deal that's believed to include 42% wage hikes over 4 years, including a sizable retroactive bump in the first year. A strike would have disrupted travel for more than 100,000 people a day. Meanwhile, 30,000 workers at Boeing are on strike, mostly its Seattle area operations, after workers rejected a deal struck by their own union with the aerospace company. Two credit agencies put Boeing on watch for a downgrade of its debt as a result of the costs of the strike. The federal government will loan $2.14 billion to Quebec-based Telesat, joining the government of Quebec to support the deployment of a satellite constellation that will bring high-speed internet to rural Canada, including the Arctic. The Lightspeed Low Earth Orbit will include technology made in Quebec. The government said it will support 2,000 jobs. And those are your business briefs. New mortgage rules will make it easier for first-time buyers to get into the housing market, but will that actually make affordability worse? Penelope Graham is a mortgage expert at Ratehub.ca. Thanks for being with us, Penelope.
Hi, thank you.
So let's start with what the changes might actually do in practical terms. The idea, of course, for first-time home buyers or for new builds. What do we think the difference will be in kind of accessing a mortgage?
So these are indeed some of the most impactful mortgage policy changes we've seen really over the last decade. And there's certainly a departure from the government's usual approach of tightening mortgage borrowing criteria for the insured and first-time homebuyer group. And they make up about 19% of Canada's mortgage market. So the fact that this buyer group is now going to be able to purchase homes up to that $1.5 million mark and use a minimum down payment to do so, and then extend their amortization up to 30 years, that is going to have a material impact on affordability for this group of buyers. And in particular, those who are in the more expensive housing markets like Toronto and Vancouver, where if you're looking to buy something beyond a condo unit, you are looking at a minimum $1 million and having to cobble up that 20% down payment. So this new policy is going to get a lot of those buyers over that hurdle.
So the complaint has been, of course, that we've increased the demand side of this equation. We've created more potential buyers without increasing the supply side. We still have the same number of homes, and we're building at a very slow pace. So do you expect this to send home prices higher?
Yes, I don't think anyone's going to be surprised when we see that this policy inflames home prices. The real estate seasons have been quite subdued so far in 2024, but we know that there is a lot of pent-up demand in buyers sitting on the sidelines. And they've been waiting for rate cuts to improve their affordability before making a move. But these new policy changes that came out of left field, this could incentivize them to come into the market sooner. And that certainly sets the stage. You know, these come into effect on December 15th for a hot January market. Lots of people tend to get into real estate in the new year, and certainly setting us up for a hot spring selling season. Will it be as dramatic as the home price increase we saw, perhaps during the pandemic, when national prices soared 51% between February 2020 and 2022? Likely not, but this does still impact 19% of the mortgage market. And it is a good example of just how quickly prices can rise when Canadians get a break on their housing affordability.
Which sometimes makes it seem like whatever you get in a break on costs on your mortgage will be made up for almost 1-to-1 on the cost of that home you're buying. There are other benefits right now as rates come down, though. Overall, the affordability picture should be improving, and we got decent data on inflation. Does it feel as though we've passed the worst of the high water mark on unaffordability, at least for cost of living?
It certainly does seem like we are steadily coming down from that peak that we hit. Borrowing prices, to your point, are anticipated to lower further. We're expecting another 2-quarter-point cuts at least in 2024, perhaps another 4 to 5 in 2025. Some analysts are expecting that the overnight lending rate is going to end up somewhere around 2.75%, which in turn is going to decrease today's mortgage rates by quite a bit. And we're also seeing that on the fixed mortgage rate side as well, because the bond market has been reacting quite favorably, again, to all of that promising inflation data. All signs point to borrowing criteria is going to ease in general for Canadians. Now, whether or not that heats up the housing market, that really is the catch-22. And we certainly have seen precedent of that when borrowing criteria has eased in the past.
Penelope, so good to have you. Appreciate your time today.
My pleasure. Thank you.
Penelope Graham is a mortgage expert at Ratehub.ca. Coming up, inflation is down, but unemployment is up. So how is the economy doing? Stay with us.